Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, August 22nd, 5:28 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in a mild correction between 4 and 5% off of the highs created by the S&P 500 a few weeks back, right above the 4,600 level. You can check the trend gauge over here. We've got bearish slash downtrend showing for market leadership. The short-term trend, meaning all 5 of the major indexes are below their 21-day moving average, as well as the medium-term trend, meaning all 5 of the major indexes are below their 50-day moving average. But the silver lining, the market does not get into serious trouble. In fact, no bear market ever occurs if the S&P 500 is above the 200-day moving average. All 5 major indexes still above that level. Small caps bouncing at that level the last 3 days. So what happened today? Really not a whole lot. O'Neill rally attempt day 3 started with a gap up. Now, anytime it's the third day off of a low, so let's go back to Friday, we had a positive reversal off the lows. That was day 1. We had a green close yesterday in the S&P and the NASDAQ 100, mainly driven by the big 7. So that was day 2. Anytime you come into the third day up off a low with a gap up, you're just looking for trouble, especially if you're in a market that is range bound or correcting, which is where we are. And sure enough, a negative reversal into short-term resistance is what we saw pretty much across the board. Disappointing, but not surprising. Here are the numbers on the day. Our 8 ETF growth composite, the RG8, down 0.1%. S&P gapped up 0.4, put in a high within the first 5 minutes. Never like to see that. We were always writing down that 30-minute opening range to see if we break one way or another. That tells you who's in charge, and we broke to the lows, so that put the bears in charge for the day. S&P 500 down 0.33%, NASDAQ 100 down 0.15%, Dow down 0.5%, same as mid caps. Russell 2000 small caps down 0.4, global 60/40, stock bond down 0.04%. Bond prices with a bounce today, meaning a pullback from yields, but they are extended to the upside, so not surprising also. In-house GROTECTION down 0.32%, in line with our expectations. This is not a growth stock chasing market. We've got our plan is when the market is under the 50-day moving average, we keep our core S&P 500 position. And as long as some other positions that are either left over from the rally, in this case, the only one left is NVIDIA. We've got the equivalent of 4.5% of that. And then we've added a couple of tiny pilot positions over the last couple of days. Yesterday added Uber, that's gone nowhere. And today added NRGU on a pullback to the low of its consolidation range, down 0.32%. This is basically where we want to be until the market shows its hand for which direction we want to go in. So let's get into the charts, and then we'll go to the tail of the tape and wrap it up. Well, Macy's, this was not where I really wanted to start, but what the heck? Macy's reported today, not a good reaction, down 14% on 452% above average volume. XRT, the retail ETF, one of the big losers on the day. Let's go to the S&P 500. This is really where we want to start, and you can see here. I'm going to take off stochastics. They've all pretty much, they've hooked up with the exception of the Dow. All right, I'll keep the stochastic on. What the heck? But you can see in here how this declining ADMA has capped any attempt at the S&P 500 going higher. And today was no different. The gap up put us right at that area. If you look at a 5-minute chart, you can see the gap up in the putting in the high in the first 5 minutes is not what you want to see. 3 waves down, rally up to 4,400, a cup, but no handle. We down to the bottom of the range before a little bounce into the close. So basically 43.84, 83.84 was the low on the day. We touched that 3 times. So if we break below that, that's a negative for the market. On the other hand, if we can get back above the 4,400 level, which we gapped above today, failed at late yesterday, and failed at twice on rally attempts intraday today. So really, right now, really, we're trapped between 43.80 and 4,400. Let's see if the Bears win or the Bulls win. Corresponding to that level, it's 44.13 is where the ADMA is. It'll drop tomorrow by probably about another 6 or 7 points. So it'll be in the right above the 4,400 level. It's very clear where we need to break above to give us a shot at the next moving average. And that next moving average now is going to be the declining 21 as it came back through the 50-day moving average today. That's not a good sign for the bulls. But, on the downside, we've got that 7 later burrito of support around the 4,300 to 43.45 area. So only getting concerned if we break below the lows of 818, which was last Friday, and then really dialing up the concern if we break below 4,300, because that's where all that support lies. We do not want to see that. We will reduce exposure if that happens. On to the NASDAQ 100. You can see same situation, gap up. We gapped above the ADMA. We actually closed just below the ADMA. That means that you're seeing some relative strength. It's subtle, but it's there on the NASDAQ over the last couple of days. However, the 21 has broken through the 50. It actually happened a couple days ago, earlier than it did on the S&P 500. But really, we're in the same situation here, and both of these indexes are driven by the big seven. In the big event tomorrow after the closes, NVIDIA's earnings, the market very focused on that. Uh, Sometimes that can be a bad omen, but everybody's saying it's focused on it. Doesn't that kind of say that everybody's focused on it, and what you wouldn't expect might happen? That might be a move to the upside. We don't ever predict. We are going into it with a position size that is very manageable for any outcome. Short term, we're up about 4% on the recent buy. Longer term, we've got 70% gains on the position that we bought months back. Here's the Dow, putting in a tight 3-day range here. The bottom around the 34,200 area, below the 21, below the 50, 1.7% from the 200-day moving average. Let's go to mid caps here. Kind of a tight 3 days. Also, this looks kind of like a bear flag. Haven't reached the ADMA yet. If this breaks down out of the bear flag, the 200-day moving average needs to hold. It's really the same situation with small caps. More of a tight 4-day consolidation and holding the 200-day moving average, which of course you don't want to break. If it does break below there, 180 is a pretty substantial support area. So that's the next level that we would look to down on small caps. Let's go to the VIX. Despite the market being red today, the VIX was also red. That's a minor positive sign. Just opposite of what the market did. The VIX found support at the ADMA, very similar to the way the market found resistance at it today. Below this declining 200-day moving average, the VIX is kind of feeling its way. Depending on what the market's going to do, volatility is picking up a little bit. You'll see what the current reading is on the S&P 500 when we get to the tail of the tape. Let's go to the dollar. Dollar making a higher high today. That's not good for stocks. It's not good for stocks at all. But despite that, gold, silver, and gold and silver stocks did okay today. Gold up 0.16%, tight 4-day range there, tight 5-day range there, actually. GDX gold stocks, 2-day bounce into the declining ADMA. Silver, excuse me. Silver up 0.5%, getting above the 200-day moving average, below the declining 50-day moving average. And Bitcoin, I didn't even look at this today. That means I'm really not that concerned about it. But after that gap down, 3-day consolidation, Bitcoin looks awful. Let's flip to bonds now. Bonds oversold to the downside, just a little bounce today in the broad bond index, which means yields came off in aggregate. There's BND. Here's TLT, a little bit of a bigger move here. So filling the gap of yesterday's gap down, up 0.8% on the day. It means you'll see a pullback in the yield of the 30-year down over 1%. Same situation, filling the gap after the breakaway yesterday. We need these yields to pull back if the market wants to go higher. TNX, the 10-year, down 0.32%. That is the interasset correlation that we present every day to you. Let's go to the tail of the tape now. A little bit of news, S&P joining Moody's in cutting credit ratings for several regional banks. That weighed big time on the banks of all sizes today. As I mentioned, NVIDIA after the close today, Friday, after the open, it's around 10 o'clock Eastern time, Powell with his Jackson Hole speech. Some notes in the day count. Went from rally attempt day 2 to day 3, 15 days under the ADMA. This is the first big character change that we'll be looking for now that it's 3 weeks in on this correction and on the inability to get back above that level. 11 days under the 21. Our expectations negative as long as we stay under the 21, and that's what we saw today with the third day gap up and the reversal. 0.97% now is the S&P ATR. Peaked at 2.5% during the bear market of 2022. It bottomed below 0.8 during the top of the most recent rally. Some sectors: gold and silver stocks up, TLT up, XLY and U, that is discretionary and utilities, up today. On the downside, the 30-year yield, banks, retail, oils, and semiconductors. Our only move in house today was to buy a very small position in NRGU as a starter at the bottom of the range. Here's what we're holding. Here's our volatility adjusted beta, still below that 1.0 ceiling that we target while we're under the 50-day moving average in the S&P and the NASDAQ. Bottom line on the day, day 3, gap up, negative reversal at resistance. Not really a surprise. You can look down here for that 7-layer burrito. I kind of like that term, but who doesn't like to see a 7-layer burrito when they go to a party, right? You get the chips and you start going away at the dip and good stuff. I don't do that now that I'm on a diet, but anyway, 43.05 is where the 100-day moving average is. 4,300 is the June 23 breakout level, up to 43.44. That's that key fib, and a bunch of different levels in between there. Do not want to see 4,300 giveaway on the S&P 500, as I said. So let's go to some names that I had, names of interest today that I had written down, some earnings related. We'll see how they ended up doing on today. Zoom. Zoom was initially up after the close yesterday. That's not how it closed by the end of the day today on its earnings report. Lowe's reported and had a positive reaction, up nearly 4%, so good stuff there. Baidu also reported. How did it do? Slightly up into the 200-day moving average, not a leader. APP, AppLovin, got an upgrade that took it above 40, which acted as resistance because, hey, leading stocks just don't break out when you're in this type of a market, so reversed back below 40. AEHR, recent leader, fallen on recent hard times, initially gapped up, and along with the market, look what it ran into, the declining ADMA, and it reversed. FN, nice move up on earnings, up 32%. One we'll be looking a little bit more into to see exactly what they do. Pretty sure it's tied to data center components, which is what all these electronics companies have been rallying on as of late. Tesla, big winner yesterday, held on to some of it today, but ran into the declining 21-day moving average. It's above its ADMA, note that. NVIDIA, even a bigger winner yesterday, but not today. Made a higher high pre-market, reversed, ended up down 3% on the day. Very volatile heading into its earnings tomorrow. IONQ trying to make a bit of a comeback the last couple of days, ran into the 21 and that 15 level. Celsius was up early in the day, finished basically flat. Hard to make. Again, 3 days up. You see it all over the charts today. Just a little too much with weakness in the market. LNW, new member of the 21 over 21, tried to make new highs. Nope, not in this market, but still up 1.6% on the day. On the downside, Palo Alto gapped up yesterday. This is disappointing, breaking below the low of the gap and below the 50-day moving average. Not good stuff there. Ollie, recent leader, undercut, reclaimed the 21-day moving average. That's what you want to see. Stocks holding up, doing just that. Applied Optoelectronics, AAOI, big leader, flat. Keep an eye on this one. This thing really moves. I showed Macy's and how bad that did. Another retailer that got spanked today is Dick's Sporting Goods, down 24%. Blamed a lot of it on organized retail theft. Can you believe that? A lot of retailers are doing that, but whether they're just covering up their shortcomings or if it's a legitimate thing, the bottom line is that it's not healthy for the retail market. And let's look at the retail market. XRT, you can see it topped along with the market, now breaking below the 200-day moving average. I also have a list of stocks that are, I made a list yesterday of 12 stocks, actually 13 now, that were at the 50-day moving average, which they need to hold if the market is going to put up a fight. One of them is Uber. That's what we bought yesterday when it tried to break above the 21, still hanging around the 10-week slash 50-day moving average. I showed Palo Alto. That was another one, and that failed today. JP Morgan is a third one, and that failed today also, as banks were very weak. A couple other ones that are holding up. Boeing, third-day bounce into resistance. LRCX, uh, reversing on day 3 up. Adobe, fairly down today, got above the 21-day moving average on its third day up, so holding the 50. Amazon, down slightly, bounced at the 50. Google didn't quite get to the 50-day yet. This one has been holding up. Two dips under the 21 and then reclaiming it today, so some relative strength out of Google. Another semiconductor equipment company, KLAC, reversing on third day up. Yet another one, Applied Materials, which is in the 2121, reversing at that 150 level near recent highs on the third day up. ELF certainly broke down from the 21, but putting up a fight at the 50-day, although, again, this looks like a bear flag, a bearish wedge. If it breaks back below the 50-day and yesterday's low, that's confirmation of the breakdown. On the other hand, if the market rights itself, this may just build a base around this level. EXTR, leading network stock, bouncing at the 50-day moving average. And finally, ATI, this is a steel alloys company, consolidating nicely around this 50-day, 21-day moving average. That's 13 stocks. 2 of them have broken down. We'll keep an eye on the other 11 as well as the rest of the market like we always do. And with that, we're going to wrap up today's Revere Market Insight video for August 22nd. Remember, it's not how much you make in the market, it's how much of that you can keep. We're in the how much can you keep mode right now, waiting for the market to decide if it wants to bounce at these levels for attempt at another leg higher. And we'll just take it day by day. We'll go level by level, moving average by moving average. We're either going to consolidate. Market can only do one of 3 things: consolidate, which is what it's doing after this bounce off the lows, trend higher. We just ran into resistance today, or trend lower. That's what we'll be doing if we break below Friday's lows. As Ross Perot said so many years ago, it's that simple. And with that, like I said, we're wrapping it up. Love to hear from you. Don at revereasset.com. My partner, Dan Stewart, if you're interested in becoming a client, Dan at revereasset.com. The phone is 855-REAL-WEALTH. That's 855-732-5932. On YouTube, please like the video. Please follow. Please subscribe. And please tell your friends. We would appreciate it. And that's it. Thanks for listening. It's Don Vandenbord with Revere Asset, telling it like it is. Not telling you necessarily what you want to hear, but what you need to hear about the market. As Ted put yesterday when he tweeted it out, and I really like this, the only video you need to watch if you have a full-time job and need to get filled in on everything that's going on under the hood of the market. This is your video, less than 20 minutes normally. Thanks for listening and have a great day.